Welcome to Trust the Code, the Alkebuleum deep dive exploring African digital sovereignty, identity, institutions, and, well, the future of trust.
Yeah, we have a really fascinating session today.
And we're going to jump right in with a pretty bold premise for you to think about. Before money can move safely, identity must be trusted.
Absolutely.
Before credit can actually grow, people and institutions must be verifiable. And before Africa can build a digital financial future, it first has to build a trusted identity layer.
Right, which really frames our mission for this deep dive. Today, we're going to unpack the Alkebuleum white paper, specifically version 2.0.
Right.
And we want to explore exactly why Africa cannot build strong digital finance things like credit systems, payments, or institutional trust without solving that identity piece first.
Exactly. Because it's easy to focus on the flashy stuff, right?
Right.
But to get there, I want to pose a foundational question. When you think of finance, you probably just think of it as the movement of money.
Sure. I mean, that's the user experience for most people.
Right. You tap your phone, you buy a coffee. But what is the actual mechanism that makes that movement safe behind the scenes?
Well, the white paper makes it very clear that finance fundamentally depends on knowing who people, businesses, and institutions actually are.
Okay, but let me push back on that slightly, just to clarify for the listener. If I'm sending money, isn't that really just a math equation?
How do you mean?
I mean, I'm just subtracting $50 from my digital wallet and adding it to yours. Why does the system intrinsically need to know who we are to just do simple math?
That is such a common assumption. And, it makes sense when payments are so frictionless today. But viewing finance as just a math equation conflates a simple payment with a functioning financial system.
Ah, okay, so they aren't the same thing.
Not at all. A payment is really just the execution of a command. But finance, real finance that can scale, means things like lending, remittances, insurance, compliance.
Right, the heavy lifting of an economy.
Exactly, and that cannot scale on uncertainty. Without identity, there is no way to manage risk or build a credit history.
You can't exactly enforce compliance either.
No, you can't. And you definitely can't prove ownership. So a payment is just an execution, but identity is what makes that payment a trusted, legal, and economic reality.
So executing a payment is, it's basically like sending a text message. But true finance is more like signing a legally binding contract.
That is a perfect way to look at it, yeah.
You wouldn't sign a mortgage with a totally anonymous stranger just because they handed you a piece of paper with some math on it.
Right, because there's no verification bedrock there. And if we take that invisible bedrock of identity or to apply it to a macro scale, what happens to an economy when that foundation is fragmented?
Well, everything stalls out, right?
It does. And this is vital to understand when we look at African economies. We are not looking at a lack of economic activity.
Oh, not at all.
Right. You have highly economically active populations. People are trading, starting businesses, moving capital. The issue is a lack of digital verifiability.
So the energy is there, but the systems can't capture it.
Precisely. The white paper details how relying on informal identity, paper records, and completely disconnected databases severely limits access to credit.
Do they give specific examples of how that plays out? Because I think that really helps ground the concept.
Yeah, they do. There's a really stark example regarding credentials. Imagine a student in Ghana. They earn a university degree, they put in the work.
Right.
But then they cross the border to Kenya for a job, and that degree simply doesn't travel with them.
Oh, wow. So the Kenyan employer has no easy way to independently verify it.
Exactly. The credential gets trapped by a lack of cross-border institutional trust. And it's even more restrictive when you look at finance.
How so?
Well, the paper mentions a Nigerian entrepreneur building up a flawless credit history. They pay back loans, they scale up.
A model borrower.
Right. But the moment that borrower crosses a border to expand their business, their credit history effectively resets to zero.
Wait, really? Just instantly back to zero?
Because the new jurisdiction's financial institutions can't verify the paper records or query the disconnected database in Nigeria, so they're treated as a complete unknown.
That is incredibly frustrating. And, synthesizing that, this means that just handing everyone a digital wallet or some payment app really only solves a tiny fraction of the problem.
It's a Band-Aid.
Yeah, because if we don't have trusted identity, we are essentially just moving money faster in the dark.
Moving money faster in the dark? I like that. And the white paper agrees entirely. Wallets without trusted identity cannot support complex financial layers.
Because you need that verifiable substrate first.
You have to have it. You cannot underwrite a business loan for a completely anonymous wallet.
So, having established this massive problem, How do we actually build this identity layer? Because historically, when governments try to do this, they build a massive centralized database.
A giant honeypot of personal data.
Exactly, a huge target for hackers.
Hmm.
How does the Alkebuleum approach avoid that?
This is where we get into the Alkebuleum identity protocol. The architects realized identity has to be portable, and it has to connect to real economic activity.
But without compromising privacy.
Right. So it's identity first, but critically, it is privacy aware.
Mm.
To do this, the protocol uses three main technologies: zero-knowledge cryptography, W3C verifiable credentials, and decentralized identifiers.
Or DDs, as they're often called.
Right, DDs.
So before we get too technical, let's give an analogy for zero-knowledge cryptography because I think it's brilliant.
Go for it.
So it's like showing a bouncer at a club a cryptographic green light that just proves you are over 18.
Okay. Yeah.
Instead of handing over your actual ID card, which exposes your home address, your exact birth date, maybe your organ donor status, you prove the fact without surrendering the raw data.
That is exactly how zero-knowledge proofs function on this network. And that sovereignty over personal data is critical.
Because you own it.
Yes. It ensures that citizens and businesses can prove who they are globally and across borders without surrendering their data to foreign infrastructure or vulnerable centralized servers.
Which is a huge shift in the power dynamic of data ownership. But, it's not just about individuals needing identity, is it?
No, not at all.
Because if I hand over that cryptographic proof of my degree, the employer still has to trust the institution that issued it.
Exactly. The institutions issuing these credentials must also be universally trusted. And that scales our conversation up to Alkebuleum's Institutional Records Protocol.
So how does that protocol handle institutions?
Well, institutions need trusted identity before they can safely issue records or extend credit or even participate in digital finance.
Right, because an anonymous bank isn't very trustworthy.
Exactly. And this impacts everything: businesses, credentials, and public records. For example, the white paper talks about securing a Liberian land title.
Oh, that's a massive use case. Land ownership disputes are incredibly complicated without a clear chain of records.
Precisely. If that land title is cryptographically anchored by a known institution, it becomes a globally verifiable asset.
Which you could then use as collateral for a loan.
Exactly. And another public records example they highlight is Liberia's anti-corruption procurement pilot.
Right, I read about that. So they are anchoring government tender processes to the ledger to create transparency.
Yes, making public spending records immutable and verifiable. But to do any of this, the underlying network has to know exactly who is validating these transactions.
And that brings us to POR, right? Proof of reputation and authority.
It does. Alkebuleum isn't validated by random, anonymous nodes in a server farm somewhere. It's secured by central banks, commercial banks, universities, regulators.
And then diaspora institutions, I believe.
Yes, them too.
Okay, but I have to question the standard blockchain narrative here.
Sure.
Because in the broader blockchain space, we always hear about systems needing to be trustless and anonymous. That's the whole ethos, usually.
Right, the Silicon Valley model.
Yeah. So why is Alkebuleum intentionally putting named real-world institutions at the center of this?
It's a great question. And it's because they are intentionally inverting that Silicon Valley model. Africa already trusts these institutions in the physical world, right?
Sure, people trust their central bank or major university more than an anonymous web node.
Exactly. So by putting the real-world reputations at stake to validate the network, the blockchain inherits their intrinsic credibility.
I see. So the incentive isn't just a financial token, it's reputational survival.
Right. If a major university tries to validate fraudulent data, it's a massive public scandal. That real-world accountability is what makes the network secure enough for things like national land registries.
That makes perfect sense for institutional trust. But from a developer standpoint, how do people actually build on this?
Well, the network is EVM compatible.
Meaning it uses the Ethereum virtual machine.
Yes, which basically...
So they get the best of both worlds. They get the global tooling, but they are building on sovereign African infrastructure.
Exactly. You drive on the right side of the road because it's the standard, but you still own your national highways.
I love that analogy. And tying this technical infrastructure back to the overarching vision for the continent, this is about way more than just tech.
It is entirely about digital sovereignty. The architects of Africa's future, like the AfCFTA, the African Continental Free Trade Area, and the AU's Agenda 2063, they are all pushing for massive economic integration.
A market of 1.4 billion people.
Right, but you cannot integrate a market that size digitally without shared, verifiable identity and records.
Which brings us right back to our central theme. Africa's financial future is simply not going to be built by payments alone.
It can't be.
It will be built by identity, trust, and records that both people and institutions can instantly verify.
And that is why Alkebuleum is being built around this exact mission, to serve as that sovereign layer.
So, as we wrap up, I want to leave you with a final thought to mull over. We've talked a lot about institutions and macroeconomics, but think about your own life.
Yeah, the personal impact.
Right. If your identity, your academic credentials, and your credit history become fully portable, completely privacy protected, and entirely owned by you.
Which is huge.
It is. How does that shift the balance of power between everyday citizens and the massive institutions that currently hold all the cards? When you actually own your verifiable reputation, everything changes.
It really does.
Thank you for joining us for this deep dive into Trust the Code and the infrastructure of digital Africa. We'll catch you next time.